Let's talk money.
Welcome back. You're with us on the pre-budget special edition of Let's Talk Money, where we are gearing up for the all-important day, the 23rd of July. Well, we've discussed the income tax regime. We've discussed capital gains. Let's also talk about housing. That's something that really touches the common man. So, gentlemen, we know the usual sections, right? Your Section 24, which allows you some deduction on the interest component of your home loan, and the principal gets covered in Section 80C itself. So, Mr. Surana, would you be expecting any changes? Anything that makes home ownership a little easier for the average man?
No, definitely. I think because housing sector is, apart from the fact that it also, in terms of economic growth, it also a major employment generation. And also it aligns with the Prime Minister's vision of housing for all. So one thing which is there, that in case of the affordable housing projects, now the tax exemption for the developers is not available.
Okay.
Which was up till 31st March 2022.
For setting up affordable housing units.
So I think unless there is more investment in that sector, the people will not get housing. So I think there is a case for extending it up to 31st March 2027. The second thing is that the interest deduction, as you rightly said, under Section 24, it is in case of self-occupied property up to 2 lakh rupees only it is allowed. And under the new regime, it is not even allowed at all.
Yeah, the new regime doesn't offer you this benefit
so I think,
of home
So
loan
really
interest,
speaking, for people to pay it out of after-tax income is very difficult. So there is a case for allowing the interest on housing loan under the new regime also. And that is why, again, the case for convergence, because more and more you come to that point.
Why to have the variance?
Yeah, and there's too much complexity. The third thing is in case of redevelopment projects, there is a major challenge because according to tax authorities, amount to exchange of asset. And the new house must be completed within 3 years. Now, many cases we know that real estate development projects are taking much longer. So I think either they should make the redevelopment, as long as there is no cash compensation, you are getting the same area back, or it should be exempt, or they should allow 5 years time, because many real estate development, redevelopment projects are not getting completed in 3 years time.
And what happens? What is the tax implication if there is a time overrun?
Because even exchange of asset is it is subject to capital gains, and therefore it becomes subject to capital gains tax. And really the person doesn't have choice. He didn't get anything. He has reinvested, but it's not in his control to get the asset within that period.
So maybe the government could.
Yeah. So I think that is another major point, which is equally important.
Fair enough. Fair enough. Anything on EVs, perquisites, anything else, homie, that perhaps we should watch out for?
Yeah. So there are concessional perquisite valuation rules for fuel cars, like running on petrol or diesel, and then very nominal values. So that really benefits employees. Basically, it goes upon the cubic capacity of the engine of the car. So the maximum that would be there, let's say the cubic capacity exceeds 1.6 cc. The perquisite value is 2,400 rupees only.
So how does it work? I mean, and this is obviously you're taking a car through your employer.
If the employer gives you a car, either it's owned by the employer or the employer takes it on lease and then gives it in turn to you. And let's say you're using it both for official and personal purposes. So this 2,400 rupees will be added onto your normal salary income and taxed. If there's a driver given, there's another small amount of 900 rupees taxed.
Right.
Now the government has been pushing, and a lot of more people are taking electric vehicles. But what's happening is that under the tax rules, the rules have not been notified or specified for EVs.
How much of a benefit can be given for an electric vehicle?
Correct. So what should be the valuation? If I have 2,400 rupees, let's say the maximum for a fuel car, and it could be a very expensive car, what should be for EVs? So the government should come out with specified rules for that also, So that's an important ask,
Fair enough. So to sum it up, before we talk about the other aspect of the show, and that's income tax returns, let's not forget the deadline is approaching, so we're coming to that as well in just a bit. Before we move to ITR, just final thoughts on what you would expect and what perhaps could be the most important takeaways from the budget from a personal tax perspective. Homie?
Yeah, so one is increase in this exemption limit, possibly increase in the standard deduction also from 50,000 to a lakh of rupees, and also bringing on par the private sector employees along with the central government and state government employees for NPS. There also could be rationalization on the capital gains tax front.
Which is going to be the big one to watch in case we get some simplification of all the multiple rates, the holding periods, etc., etc. Suresh, in a nutshell, what would your watch points be?
Yeah, so I would definitely, once again highlight that there is a possibility of convergence
between the two
regimes,
income
because
tax
it is becoming
regimes.
too complex. The second point is, of course, apart from basic exemption limit, which already Homi spoke about, the maximum marginal rate being capped, and 80C deduction and in terms of the interest on housing loan should be allowed under new regime also. Because just one very important point I would like to highlight, which probably has not been observed, that the saving rate in India has been coming down dramatically. So 10 years back, it used to be 34%. Now we are at 30%. If you want to maintain an economic growth rate of 7 to 8% of GDP, we need investments.
Sure.
Whether it is new manufacturing project, whether it is housing projects. So you can't equate a normal expenditure with an investment. So we must promote the savings, culture.
And investments.
So 80C and therefore the also interest on housing loan.
Housing should be brought into the new regime as well. I think the savings rate is also coming down because we are traveling more. We want foreign holidays. We are aspiring for better houses, better cars, better watches. It is a new India, right? Maybe that also has something to do with it. But okay, now we are coming down to the final leg of this conversation. And that brings us to income tax returns. Have you filed yours or not? 31st of July is the deadline. So, gentlemen, we need a quick, ready reckoner, a quick checklist of sorts. I know I need to file mine as well. So, Homi, what should we watch out for?
Yeah, so right now the deadline is that for salaried people, and the deadline is 31st of July. So they've got to see that they ensure that the return is filed on or before 31st July. So while filing the returns, obviously they will take all the necessary documents, bank statements, and Form 16s from the employers, etc., maybe interest certificates, dividend counterparts, etc. But it's very important that prior to filing the return, every individual should be checking his or her Form 26AS and the AIS, TIS statement, because that gives the information about the salaries, the taxes withheld, if you earned dividends, if you earned interest, if you made other kind of payments, etc. It's important that everything is captured in your tax return.
So reconcile everything.
Absolutely, you must reconcile. And it's clearly also mentioned in these AIS, TIS that in case an income which has not been mentioned in the AIS by the deductor or the payer, please ensure that if you earn the income, for example, let's say it's reflected in your bank statement and not reported there, that is also then captured in your tax return.
Got it. Any tips on this?
I think that, of course, as Homi mentioned, very important point that you reconcile 26AS with AIS, because any such mismatch may result in demand later or any addition. The second important point is to select the right ITR form. So you have ITR 1, 2, 3, 4. So 1 and 2 is for people who are not having business income.
And so largely salaried people stick to ITR 1 or 2.
So ITR 1 and 2. And in ITR 1 is a simpler form. It is called ITR Sahaj also.
Sahaj, yeah.
And basically, if you have just salary income, one house property, and income from other sources, which means you don't have capital gains and you don't have business income, then that is the form.
And up to 50 lakhs of income.
Up to 50 lakhs of income. Yeah. And also it is not available to HUFs, non-resident, resident but not ordinarily resident people. Also, if you are director of a company or you are holding shares also, even though it may not result in income, then also you cannot file form ITR 1. So it is, you have to just make sure that you fill the right form. Otherwise, it may be treated as invalid return. The also third point is that you should put your revalidated bank account because then the refund will be quicker to get, and also you can get the EVC code for when you have to do the e-verification of your return.
Okay.
Then so one at least your bank account which is duly validated with your PAN and your so that the refund is easier to get into that.
Okay, all right. I think those are very helpful tips to keep in mind while we're going ahead and filing our income tax returns. Gentlemen, we're out of time, but this was a very, very helpful session. Thank you so much. And we hope to have you back on once the budget exercise is over to make sense of all the new announcements that come through. For the time being, it's a wrap on this edition of Let's Talk Money. Remember, of course, we'll be right there with you, for you throughout the budget week. We'll keep getting you more analysis and, of course, the fine print, the simplified version of what it means for you. So watch out for next week's episode as well. See you again very soon.
Let's Talk Money